Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The Lal Street ends a volatile day and week with marginal losses. The mid-cap index outperforms, gaining 2% this week. Adani Group stocks remain under pressure. The index provider MSCI cuts the free float on 4 Adani Group stocks, wiping out 33,000 crore rupees in market cap. The group has lost nearly 10 lakh crore rupees in investor wealth since the Hindenburg report.
We'll be meeting shortly. And I can't tell you what the questions we have in mind, but then the questions that most investors have in mind and why this market collapse has happened is one of the things that we would like to know from them.
LIC Chairman M.R. Kumar tells CNBC-TV18 they're not thinking of investing further in Adani Enterprises at the moment. Confirms he's reached out to the Adani Group and will meet the management soon. Also says policyholders have nothing to worry about. M&M's Q3 earnings beat estimates on revenue, EBITDA and margin. Net profit comes in below expectations due to an exceptional loss of 630 crores. The company claims to have gained 41% market share in the agri segment and over 20% in the SUV space. Alibaba sells its remaining 3.1% stake in Paytm via a block deal, marks its exit from India completely. It had earlier sold its investment in Big Basket and Zomato. Respite for some digital lenders, the government issues orders to revoke bans on select fintech companies. The IT ministry had banned 94 loan apps based on requests from the Home Ministry over allegations of money laundering and links to China. Pressure mounts on Turkey's President Erdogan as the death toll due to the devastating earthquakes in the region crosses 21,000. US suspends the sanctions imposed on Syria for 6 months, allowing international aid to reach the victims. Explosions across several regions in Ukraine as Russia fires several missiles, damaging critical infrastructure facilities. No word on casualties, but several parts of the country are left without electricity. The attacks follow President Zelensky's visit to some European countries to push for long-range weapons. Well, let's start with the market action. The sensex and the nifty ending a volatile trading week with marginal losses. The sensex lost over 100 points today. Mid-caps did manage to outperform for the week with gains of 2%. Nigel is standing by to wrap up the market action for us. Nigel, volatility, the theme this week.
Well, thanks a lot for that. It was actually a good week for the Indian markets after a while because the Nifty ended more or less flattish. You had a couple of those developed markets that were under pressure. And you had a couple of Asian markets as well that did end with cuts. The Shanghai market was flattish, and we'll take a flattish week because year to date, actually, India is still an underperformer. But for this week, we were relative outperformers. Moving to today's action, well, it was another range-bound day of trade for the Nifty. Though the mid-caps and the small-cap indices, there was more traction on that front, and both those two indices did pretty well. On the downside, the 17,750 to around 17,800, that seems to be a bit of a buy zone for the bulls. Last couple of trading sessions, we have gone to that level, and we are seeing some bit of support that's coming in there. So that's a crucial near-term support. In terms of stocks that did well, Tata Motors, you had UPL as well as Cipla. All three of them were the top gainers on the Nifty. On the flip side, there was an MSCI rejig that was announced, and because of that, you had Adani Enterprises as well as HCL Tech. Both of them reacted to that piece of news, and they were the top losers on the Nifty itself. Metals, they lost their shine this week. You had both Tata Steel as well as Hindalco. The reported numbers rather disappointing on the whole because Hindalco's Novelis performance was disappointing. Both of them did go home with cuts. But there were plenty of earnings reactions. So Oro Pharma reacted positively to its numbers. Lupin, the numbers look good, but the street wanted more, it seems. So that stock did come in for some profit taking. And Voltas, the stock closer to around a 52-week low. Well, it saw a good bounce from the low points of the day. While United Breweries, disappointing on the top line, disappointing margins, that stock went home with a bit of a cut. So in the near term, it seems that we're in a bit of a range. On the downside, 17,750. On the upside, 18,000 odd. Let's see whether or not the bulls have enough ammunition next week to get past that 18,000 odd mark.
Nigel, many thanks for joining us. Now, the Adani Group stocks under pressure. This after the MSCI cut the weightage of Adani stocks on the index. The group has lost nearly 10 lakh crore rupees in market cap since US-based short seller Hindenburg raised several red flags. Today, the MSCI has cut its weightage and announced a reduction in the amount of freely tradable shares of Adani Total Gas, Adani Transmission and ACC. These come into effect from the 28th of February. In a statement, MSCI said due to the lack of uncertainty in the characteristic of certain investors, they can no longer be designated as free float. And separately, according to a Reuters report, India's market regulator SEBI is investigating the Adani Group's links to some of the investors in the conglomerate's aborted $2.5 billion share sale. Vivek is standing by with more on the MSCI decision on the Adani Group and the impact that it is likely to have. Vivek.
Well, so, the uncertainty regarding the treatment of the Adani Group stocks within the MSCI index has now given way to clarity. MSCI has told CNBC-TV18 exclusively that, now what they're going to do is, at least in the Feb index review, they're going to reduce the weightage of 3 of the stocks that had the highest weightage in the MSCI standard index. So the 3 stocks that we're talking about are Adani Enterprises, Adani Total Gas, and Adani Transmission that had the highest weightage will see cuts as far as the weightage is concerned within the MSCI standard index. So this, according to analysts, will lead to some selling pressure on February 28th, and the changes will be effective March 1st. So Adani Enterprises expect to see outflows of over $180 million. Adani Total Gas expect to see outflows of over $120 million. And Adani Transmission expect to see outflows of a little over $160 million. Now, it's important to note that all of the Adani Group stocks that were part of the MSCI index continue to be a part of the index with, just the weightage being reduced. Now, along with that, the other stocks that have been added to the index are Bank of Baroda as well as CG Power. And the stock that has been deleted from the MSCI standard index is actually Biocon. So Bank of Baroda analysts are expecting flows of over $130 million, while CG Power expected to see flows of close to $150 million. Biocon is expected to see outflows of over $75 million.
Vivek, many thanks for joining us. LIC Chairman M.R. Kumar telling CNBC-TV18 that they are not thinking of investing any further in Adani Enterprises and will meet the management to know the reasons behind the current stock collapse. In a conversation with my colleague Yash Jain, Kumar said that LIC has been investing correctly and fairly, assured that policyholders and shareholders need not worry. Kumar said whatever needs to be done will be done. Take a look.
The total investments in the entire Adani Group are at AUM. A part of AUM is less than 1%. It's 0.975%. So that is hardly anything. So we need not worry about that. I can assure people that we are taking care of whatever needs to be done will be done. We have to take it as it comes. I mean, this is too short a period to take a call on whether I have to take a call. In this particular case, I think we will be sitting down and working out some more time. I mean, wait some more time and see what happens.
You also committed 300 crore as far as the FPO is concerned under anchor investors. Today, that same stock, the same value that you saw in the stock is available at 40% cheaper as far as open market is concerned. Does it not make sense to you, to your investment team, to actually go out and invest that 300 crore or more in buying the stock from open market now, since you were interested earlier?
That's a very leading question. So, I mean, stock specific, I cannot take a call. I mean, again, as you said, it's the investment department to decide what we need to do. But as of now, we are not thinking of doing anything. The assessment to buy or to sell keeps happening, keeps changing. So as of now, I mean, I see the markets are quite okay. I mean, for us, the markets are always good. Whether they are down or up. We have reached out to them already. We have not met so far. We'll be meeting shortly. And I mean, I can't tell you what the questions we have in mind, but then the questions that most investors have in mind and why this market collapse has happened is one of the things that we would like to know from them.
Well, that's the LIC chief. They're saying that they will be meeting with the Adani Group shortly to understand what has led to the kind of market capitulation that we currently see. And staying with the Adani Group, the Supreme Court has today red flagged the loss of lakhs of crores of investor wealth in the Adani stock crash. The court was hearing a plea that sought investigation into the Hindenburg report on Adani. The Supreme Court has asked market regulator SEBI to submit a report on the existing framework to ring-fence investors for shocks to share prices. Ashmit joins us now with more details. Ashmit, take us through what has transpired in court and the observations that have come in from the Supreme Court.
Well, as soon as the petition was taken up, there was a lengthy discussion that the three-judge bench engaged in. And after that three-judge bench discussion, Justice Chandrachud made some key observations. Number one was the concern that he red flagged was erosion of investor wealth. He pointed out that, number one, he was being very guarded in making any comments because the stock markets are driven by sentiment, and that he did not want to spark any worries as far as stock markets are concerned. That's one. Second, he said as far as investor wealth is concerned, reportage of this entire issue over the last 2 weeks has clearly indicated two factors. Number one, that there has been increased volatility and that there has been erosion of wealth to the tune of lakhs of crores of rupees. And And that has led to a few suggestions coming in from the apex court. The Supreme Court has asked a few pointed questions to the market regulator, SEBI in this case. Number one, the question that is asked is, what about the current legal framework? Is it competent to deal with such shocks to the system? The second concern that has been raised is that as far as whether there is need felt by the market regulator for perhaps any amendment to the regulatory framework to give it more powers, to add new laws that will strengthen this legal framework. The third key aspect is the Supreme Court has suggested to the market regulator to not act in isolation, but in fact to consult the finance ministry, which in this case would be the nodal ministry, and then to take it forward from there and perhaps come back with Monday with some answers on the sufficiency of the current legal framework. Having said that, the apex court was also quick to add a caveat that none of these comments should be construed as SEBI not doing its role. So the apex court is remaining silent on that, again reiterating that it does not want to spook the stock markets, and then going on to say that yes, we are aware that the Solicitor General has informed the apex court that there is indeed some amount of SEBI oversight on the issue, and that SEBI is monitoring the situation as we speak. So some questions, some suggestions, and some important directions coming in from the apex court. Monday holds the key when the market regulator comes back with some answers to these suggestions and questions put forth by the apex court.
Well, thanks very much, Ashmit. Just to clarify, the market regulator over the weekend on Sunday had issued a statement saying that they are fully vigilant and have taken measures to attempt to curb volatility. Of course, more developments coming in thick and fast in this matter. Now, Prime Minister Modi kickstarting the three-day UP Global Investor Summit. The Prime Minister made a pitch for UP to corporate leaders. Mukesh Ambani, N. Chandra, K.M. Birla were present at the summit announcing their investment plans. However, Govt Adani, who's been part of the previous editions of the summit, was not in attendance this time.
एक तरफ डबल इंजन सरकार का इरादा और दूसरी तरफ संभावनाओं से भरा उत्तर प्रदेश, इससे बेहतर पार्टनरशिप हो ही नहीं सकती.
Jio will complete its rollout of 5G to cover every town and village in this state by December of 2023. That is in 10 months from today. I am happy to announce that we plan to invest an additional 75,000 crores in UP over the next 4 years.
I'm happy to say that we are going to build an integrated multimodal air cargo through Air India sets with our partner Zurich Airport in the new Jawahar Airport.
Well, corporates there speaking about their prospective investment plans for Uttar Pradesh. In earnings today, Mahindra & Mahindra posting a steady quarter powered by good operational performance, revenue, EBITDA and margins all ahead of expectations. However, net profit missed street estimates owing to an exceptional loss of 629 crore rupees.
So if you look at the Mahindra Trucks and Buses, it's a division within M&M. And I think as we have been looking and evaluating the business, and if you go back, I think we had put it in a category where it has to be carefully examined. I think the upswing is there, but when we took a call on the fair valuation of the business in terms of the carrying value of the assets, I think that's where we have taken a correction, one-time correction, which is the main reason for the exceptional loss.
Well, that's Mahindra & Mahindra there. Now, Paytm shares under pressure today after reports emerged that Chinese multinational group Alibaba sold its remaining 3.1% stake worth 1,000 crore rupees in the fintech company. This completes Alibaba's exit from India. Alibaba had earlier sold its investment in Zomato and Big Basket. Yahoo has announced that it will trim 20% of its workforce, impacting around 1,600 employees in its ad tech business. As of yesterday, around 1,000 employees were laid off. 600 more employees will lose their jobs within the next 6 months. Here's a CNBC-TV18 exclusive in what could come as relief for some digital lenders. The government has issued orders to revoke their ban. Sources telling CNBC-TV18 that the IT ministry has sent a list of company names to be removed from the ban list to Google and to internet service providers. Ritu joins us now with the details. Ritu, a lot of fintech companies have been in conversation with MeitY to try and get themselves off that ban list. We understand that meetings have happened over the last few days. Do we know how many have been taken off the ban list? What can you tell us?
That's right. We do understand from our sources that the government, or more specifically the Ministry of Electronics and Information Technology, has started issuing orders revoking the ban on certain digital lending companies which were originally featured on the ban list. Now, we have been given to understand that the government has already reached out to Google and to internet service providers, asking them to revoke the ban on certain companies, which includes the like of Kisht and others, which were featured on the list of 94 companies to be banned earlier. Now, this decision comes after a review meeting was held with some of these fintech players. We reported earlier that at least a dozen of them had gone to the government making representations seeking the removal of this ban, and in support they had submitted several documents with the government as well, which included their certificate of registration, their investors, shareholding patterns of their companies, the grievance redressal mechanism, among other documents. And once the government was satisfied of their legitimacy, it has started to issue these orders to Google and to internet service providers to revoke the ban on some of these companies, bringing a huge relief to the startup ecosystem, really.
Ritu, many thanks for joining us. So, relief coming in for some fintech companies. We are, of course, awaiting official confirmation. India's Mines Ministry has announced the discovery of 5.9 million tons of lithium in Jammu and Kashmir. This is India's first major discovery of the rare earth mineral widely used in electric vehicles. That and more when we return. The Union Mines Ministry has announced the large discovery of lithium in Jammu and Kashmir. The rare earth mineral is essential for manufacturing electric vehicles and batteries in particular. At 5.9 million tons, this is India's first major discovery of lithium reserves. Sonal Bhutra is here to explain the significance. Sonal.
Well, it is definitely an important step for a couple of reasons. The first one being that it is the first time that the government has been able to discover lithium reserves in the country. And second of all, the amount is not small, 5.9 million tons being discovered in the state of Jammu and Kashmir. Now, why is this amount really important? It is because it actually can compete with the global average. If you look at the numbers, Chile has the highest reserves, lithium reserves in the world at 9.2 million tons, which is followed by Australia at 5.7 million. We have China at 1.5 million. There's Brazil at 95,000 and Portugal at 66,000. Now, definitely it's a competitive amount that has been discovered here. And lithium is an important mineral because it is used in lithium-ion batteries, which are ultimately used in electric vehicles. And so far, India has largely been importing these important minerals which are used in EVs, the likes of cobalt, nickel and lithium. So it could be a step towards self-sufficiency as well. But of course, a lot depends on how much of it is actually discovered and refined as well, because that is what the value chain looks like. After that, it goes for refining, cell production, then module assembly, and that is when it goes into the OEM. So of course, a lot of steps have to be covered here right now, but it is an important update that we have received. India has a target to expand their EV penetration by 30% by 2030. Right now, it's only at 1%. So if, of course, we get self-sufficiency as far as lithium mining is concerned, it could be an important step when it comes to this push that we are seeing towards electric vehicles.
Sonal, many thanks for joining us. Now, the government is mulling handing over the probe into the abuse of FAME subsidies to an investigating agency. Sources say legal opinion has been sought on how to proceed with the probe on alleged misappropriation of FAME subsidies. Parikshit is standing by with more details. Parikshit, there was already a government probe underway. Take us through what is the thinking now?
Well, there are officials who believe that possibly it's time to hand this over to an investigating agency. We're talking about possible misappropriation and misuse of FAME subsidies by 12 OEMs. The government has already suspended FAME subsidies for Okinawa and Hero Electric for misappropriating or claiming subsidies for items for whom the localization criteria has not been met. There are at least 10 other OEMs for whom the FAME subsidies have been put on hold currently because there are certain doubts about their procurement process and their indigenization levels as well. So what is going to happen here? Well, the Department of Heavy Industries, which has been carrying out this internal probe, is reviewing the information that has been given by ARAI on all these companies. It is going to seek a legal opinion from the Attorney General, and following that, this probe could be handed over to an investigating agency. So let's see what happens. A final call is yet to be taken. There has also been a separate complaint received by the Department of Heavy Industries against companies like Ather, Ola, TVS and Hero Motocorp's Vida Electric Company. But this is for a separate issue that subsidies are being claimed by these companies on scooters which cost more than 1.5 lakhs. The subsidy under FAME can be claimed only for electric two-wheelers which cost up to 1.5 lakhs. So ARI is seeking clarifications from the companies. Let's see what happens. But these are two separate issues, the bigger one being about the FAME subsidy going into a formal investigating agency.
Well, thanks very much, Parikshit. In fact, speaking of FAME subsidies, as you probably heard, Nitin Gadkari, the Union Minister, saying here on CNBC-TV18 that he believes the time has come now for industry to step up and move to an era of no subsidies. GST benefits, of course, he said, should continue, and that's pretty material in his words, but he believes that FAME subsidies have done their part. Now, the upcoming GST Council meeting on the 18th of this month will take up the issue, or likely take up the issue of keeping cement in the highest 28% tax slab or moving it lower. The Council will also discuss the report on the appellate tribunals and taxing online games, race courses and casinos. Here's the CBIC Chairman, Vivek Jory.
जीएसटी काउंसिल या परिषद की बैठक 18 फरवरी के लिए निश्चित है। एजेंडा अभी सर्कुलेट होगा। जहां तक फिटमेंट की बात है, जी हां, वित्त मंत्री ने यह वक्तव्य दिया था कि सीमेंट पर 28% की दर से जो अभी जीएसटी लगता है, उसके बारे में विचार करने के लिए फिटमेंट कमेटी बैठेगी।
Well, that will be the big one. This has been the demand from industry to try and bring down GST rate from 28% on cement. Will that be taken up on the meeting that the GST Council has on the 18th of February? We will keep you posted right here on the GST Centimeter. And with that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Stay tuned. The news continues on our Friday special Editors Roundtable. That's coming up next.
Co-powered by